Welcome you tune into News Now with me, Ankita Saxena. Well, the state-owned banks are seeing heavy selling pressure as the 12 constituents declined after the government ruled out raising the foreign direct investment limit in public banks. Let's move on. We'll get you more on that story, but we will move on
Well, joining me today for a very special interaction is none other than Anant Goenka, the newly appointed president of FICCI and a leading voice of India Inc. And as the executive vice chairman of CEAT, he brings deep industry experience across manufacturing, mobility, technology-led transformation. And at a time to think of it when India is navigating global volatility, building domestic competitiveness, and also accelerating its infrastructure and energy ambitions, Anant steps into this role with a mandate to shape policy, push reform and amplify India's growth story. Anant, welcome to ET Now and congratulations firstly on taking charge at FICCI.
Thank you, Aisha, for having me. It is a great honor and of course I will put in my best in this new role that I've been assigned to.
Right. So, Anant, as you take charge at FICCI, what's your reading of India's economic momentum right now? Can we sustain this 7% plus growth amid the global headwinds that we're facing?
But I think we are at a very strong macro position. Our risk levels as a country are very low. Inflation levels are well in control. Fiscal deficit is in control. Growth rates are looking very strong. So I think we are in a very strong position from a country perspective. I think the one change that has happened in the last year is that geopolitics and business and economics have tied in very closely together. And therefore, the last year has been a lot in terms of uncertainty, particularly led by tariffs, supply chain uncertainty, and challenges largely with respect to availability of key materials in some industries. So to that extent, those are some challenges, but overall, I think we are very well positioned going forward.
Anant, I want to talk about the private CapEx cycle here because the government CapEx has carried the economy for the last 3 years. But what will it take for private sector CapEx to meaningfully pick up?
So I'd say the main reason for private sector CapEx not picking up is a little bit of challenge on the demand side. I think a lot of that has been addressed in the last year. Initially starting off in January with the budget changes that happened, and then followed up with the GST 2.0 changes that's put in about 2.4 lakh crores in the hands of the consumer. I think with this, we are clearly seeing a buoyancy in terms of demand, particularly led by the auto industry, as well as across the board, a fair amount of shift that we've seen. October was good, November continues to be good. And I think that will result in further spurring of CapEx and higher utilizations of factories. I think one area where I would say that industry needs to do better is really towards thinking more on quality, global growth in general. And I think some amount of the onus is very much on us to make sure that we are able to think higher scale, think bigger, and shake up industry as well.
Right. And I guess the RBI would play a very big role here, right? With core inflation softening, do you believe that the Reserve Bank has room for rate cuts early next year, or should the pause continue given the global uncertainty?
No, we do hope that there is some amount of rate cut, maybe about 25 basis points would be very welcome. We think, again, the macros are very strong, so it would be a good time to push growth and work hand in hand with respect to the reform agenda of the government as well.
Anant, I have to talk about the rupee here because that's been making headlines as of today. It's already breached the 90 to the dollar mark. How are Indian exporters and import-heavy sectors reading the rupee's trajectory? And does a weaker rupee help more than it hurts?
Difficult to say. It's just a very recent development. And I'd say that it's happening largely because of market conditions, current account deficit, foreign investors may be investing more in the US and dollar outflow happening as a result. But I would say I would not lose too much sleep. I think some amount is also happening because of the US agreement. But I do understand that it is around the corner. A large part of the negotiation is over. And if that were to come soon, then I think rupee strengthening will happen again.
I have to talk about the India-US deal here, the trade deal that is, Anand, because there's renewed buzz about progress on US-India trade agreement. What are India Inc.'s top priorities, and where is it that you see the sticking points?
Right. We had Commerce Secretary address us at our AGM just a few days ago, and it appears that a large part of the negotiation is complete, or we're towards the end of that part of it, and it's more a matter of the final formalities that are left. If that is the case, I think we would have settled. I don't know the details of the agreement. Of course, we've also heard positive inclinations on the news from the President of the US. So to that extent, I think it is around the corner in terms of a deal happening. I think the sticky areas are very much what we've already seen with respect to dairy, food products, and of course, India's relationship with Russia. But I'm sure the two countries would have come to some kind of an agreement on that. I think we are naturally strong partners, high level of complementarity in terms of our strengths, two large democracies. I think it's a matter of time that we will come to something.
Right. Also an important, event, Anant, the budget, just a few months away. Before we know it, it'll be 1st of Feb. What are your three big asks from the upcoming union budget? I mean, both for the industry as well as, the consumption revival, which clearly seems to be government's biggest priority right now.
Right. A couple of asks that we have. One is on Atmanirbharta for defense. We are seeing technology undergoing major change in terms of defense. And I think to that extent, we can invest more on research and more on new frontier technologies. So we've recommended a further outlay of about 10,000 crores on DRDO, a 30% increase in CapEx with respect to defense spend, and a 10% increase in OPEX with respect to defense. So the entire defense piece is one part of our recommendations. The second is on export promotion. So the government had the export promotion mission launched recently in addition to a credit guarantee scheme. I think that is also very welcome. We would further say that on the RODDEP side, some more outlay will help promote exports and help industry to a certain extent.
Anant, I have to talk about the infrastructure build-out at this juncture, because India clearly seems to be in the middle of its biggest infrastructure push ever, if I can call it that. What is the next wave of opportunity? You did talk about defense, but what else?
So I think the infrastructure outlay and continuous spending over the years and continuous increase is very, very welcome. It has so many multiplier effects, whether it is to do with jobs, improvement of roads and highways and other infrastructure, connectivity, and then over time, logistics cost and ease of doing business also coming in. I'd say the next few areas of reform that we would recommend would be on the aspect of land and power. I think land acquisition is a challenge. So that would be one where how do we find solutions to that? Second is on power and energy. There's fair amount of cross-subsidization that happens on that front. There is a shift towards renewable energy, and I think there's lack of uniformity at a state level on adoption of uniformity. So we would say these are few future reforms that would certainly help by the government.
Power brings me to the fact that power demand has been hitting record highs, right? Wanted to understand what sort of policy shifts are needed around, say, distribution, renewable integration, and more importantly, storage support.
Right. So one could be some kind of promotion for battery investment and battery growth. I think that is one certainly area which will allow round-the-clock use of renewable power. In terms of the grid, there are still some challenges with respect to right-of-way. So some more focus on right-of-way, whether you call it a strategic area of focus or criticality being brought in on that area will help. And I think on the state side, a lot needs to be done on renewable. There is a bias to use the current energy that is there provided by the state, which may be thermal or coal-based. But if you're looking at setting up your own renewable power as a factory, it's still not easy to get that connectivity and permission. So I think, and it varies from state to state. So some amount of uniformity across states will help in terms of providing that connectivity.
Right. The other thing I also wanted to talk about was, exactly what is happening when it comes to the tire industry. And since I have you here, I have to talk about that. Because you come from one of India's biggest tire manufacturers. Tell me, how is it that you're assessing the demand cycle right now? And if Motown numbers are anything to go by, it seems that this is one sector which is firing all engines.
Yes, demand is looking very strong. I'd say across the board, we're seeing double-digit growth until now. We have seen in the first 2 quarters. Going forward, this momentum is continuing. Particularly, you've seen OEM numbers, car numbers, two-wheeler has seen 50% growth in October, about a 20% growth in auto numbers. So demand is looking very, very positive. I think on the raw material side also, prices have been fairly stable. Rubber is at about 185 rupees per kg. Crude has also been fairly stable. So to that extent, we expect strong margins to continue and growth to be even stronger going forward.
And what policy interventions or long-term contracts can de-risk the industry, you think, from the volatility that both crude and rubber prices actually impose?
So from CEAT side, we are looking at a very strong global push. We've been investing in EU, in the US in terms of looking at setting up new markets out there. So I think that's an area which is really helping us up the quality of our products, understand new areas of consumers. And one area which I'm passionate about is building a brand, an Indian brand for the world. And if we're able to do that, I think that would be excellent from a company side.
So I have to talk about the EV transition then and the tire tech, right? Because EVs require an entirely different tire performance standards. Tell me, is the Indian tire industry, Anant, ready for that transition at scale? And like you say, taking the Indian industry global?
So we are seeing a big shift across the board with respect to EV. I'd say in the last 2 or 3 years, it was a little slower. But now if you look at the new vehicle launches which have happened, whether it is Indian players, whether it's Tata, Mahindra, even Chinese companies coming in, whether it's in partnership with Indian companies, we're seeing a much higher growth of EVs. With respect to tire technology of EVs, we've done a lot on our side. It's much lower noise, more sustainable products getting used, higher torque. So we're finding changes happening to tire technology. But I think on India, we have to set up our charging infrastructure. And I think we are fairly good to go in terms of growth of EV business.
But what about the whole debate about, imports versus domestic manufacturing, Anant? Because there has been concern about cheap imports disrupting the domestic market. What level of protection or policy support you think does the industry need to try and stay competitive?
Yeah, I think the India-UK agreement has been very well drafted. There is a phasing of import of products from the UK. It's over a 7 to 10 year period that duties will over time come down for automotive products. And similarly for products that we sell into the UK. I think it is more about international players need to be worried about Indian players going out rather than Indian players worrying about international cars getting imported. So I think it's a great opportunity for India, and we can certainly look at that as a model, the India-UK agreement as a model for the future.
So let's talk about India's industrial ambition. As FICCI President, Anant, what is your broader vision for India's industrial competitiveness? I mean, everything from manufacturing to exports over the next 5 years.
Right. So for FICCI, our most important priority is how do we make India the factory of the world? How do we take up manufacturing from 15%, 17% of GDP going up to 25% of GDP? And to do that, we have 4 priorities in FICCI. One is manufacturing excellence, which is how do we make industry produce high quality products, adopt more sustainable practices, get more women in manufacturing, and more digital or Industry 4.0 practices. The second is on trade and supply chain security. How do we leverage the FTAs that are there? How do we make sure that supply chain resilience is strong in the industry? The third is on ease of doing business, which is partnering with the government to ensure that we are continuously recommending good reforms and based on what has been already done, ensuring strong implementation across the country. And the fourth is innovation and R&D, where how do we utilize the 1 lakh crore fund, take up innovation R&D from 0.7 to 1% plus levels, and finally, industry academia partnerships. So these are the four priorities that we have, and we are working very closely with the government and within industry to make sure we really take up our manufacturing quotient.
So that's for the next 5 years, Anant. But what's the table on, or rather task on the table right now as you now have FICCI?
So right now it is all of this. So there's so much that is happening at the government. We have FTAs that have been signed. How do we fully leverage the FTAs that have been signed, as well as going forward? As I said, on innovation R&D, it is about utilizing the 1 lakh crore effectively and working with the government to make sure there are tweaks if there are needed. And lots for industry's sake. How do we make sure we have great companies sharing their best practices on sustainability, on innovation, on digital and industry 4.0? So we have a bunch of work that we are doing and I hope to take that forward.
Okay, and good luck with that. And congratulations once again, Anant. Thank you so much for your time today.
No, thank you for having me.